My name is Charlie, and on this channel I make videos about wealth building and achieving financial freedom so that you can free up your time to focus on the things that you truly care about. So for those of you that haven't seen the first episode of this Road to Financial Freedom series, I'd of course recommend that you check that out first. But as a quick reminder of what this series is all about, this is where I document the growth of my small Robinhood portfolio, which I'm trying to grow as quickly as possible, using the strategies that I talk about on this channel like covered call writing and leaps option buying. So I started this account about a month ago with a $5,000 deposit, and in addition to that, I'm also depositing $200 every single week. So the goal is to simulate the portfolio of someone working to achieve financial freedom, essentially starting from scratch, and to see how quickly it can actually be done. So with that said, let's open up Robinhood and see how the portfolio is doing so far. So we can see my total balance is currently sitting at $6,045, and if we scroll back to the beginning of December when I started this challenge, you can see that my total deposits add up to $5,845, so I'm up about $200 so far. Now I had also made some trades on Robinhood back in October and November, but of course that wasn't a part of this, and my actual starting date for this challenge was December 4th, so that's the date that I'm looking at. Now of course, aside from this chart, Robinhood really doesn't give me that much data to work with, so I've actually been maintaining my own spreadsheet on Excel, which I introduced last episode, so I'm going to work from that for the rest of the episode just because it's a little bit of a better way to track my progress. So pulling up my spreadsheet here, this is really where I track everything related to my portfolio. So over on the left hand side, I've got all of my stocks that I'm holding, including my covered call stocks, my leaps, and my long-term holds. And then on the right side here, this is where I track my total portfolio balance. And we can see that my total gain right now is about $195, which for 1 month isn't too bad, but it's not as good as I was hoping, and we'll get into why that is in a minute here. Now we'll start by looking at the performance of my long-term holds. So down here, I've got all the stocks that I'm currently holding, and as I mentioned last episode, below that I've got some stocks that I want to hold in the future, but I just don't quite have the cash available in my account yet. But for the stocks that I am holding right now, my total gain is about $80, and I'm up on every single one of these holds, so I'm pretty happy with that so far. Now considering that my primary strategy is covered call writing, the thing that I'm really most concerned about is the premiums that I'm bringing in. So down here I've actually got a tab where I track all of my premiums I'm bringing in. So I'll go ahead and open that up, and we can see that I brought in a total of $559 worth of premiums just in December of 2020 alone. So for a $5,000 to $6,000 portfolio, that's about a 10% return on premiums alone. So I'm definitely pretty happy with that. Now of course that's a great return, but that's also reliant on the fact that the stocks that you're selling covered calls on are actually increasing or at least remaining neutral in value. Because you have to hold 100 shares of each of those stocks in order to sell a covered call against them. So if the stocks are decreasing in value, you could still lose money overall even if you're bringing in high premiums. And that's why it's extremely important to sell covered calls on stocks that you believe in for the long term, because if you can feel confident that your stocks are going to keep rising over time, you can essentially just focus on increasing your premiums from month to month and not have to worry about your stocks decreasing in value. Which leads me into the reason why this portfolio hasn't done quite as well over the last month as I was hoping. Because if I brought in $560 worth of premiums and my long-term holds are all up in value, then how is it that I'm only up $200 overall? So to take a look at that, we'll pull up my main tab here. And really the only reason that this portfolio hasn't performed quite as well as I was hoping is because of this one stock here, Virgin Galactic. You can see that my cost basis on my shares is about $31, and the current value of the stock is only about $25. And that's just part of the risk of selling covered calls on these cheaper, more volatile stocks, because it was really just one event that happened with this company that caused it to drop almost 25% in value. So as you know, if you watched the first episode of this series, Virgin Galactic is a spacecraft company, and back on December 12th, only about 5 days after I actually bought the stock, the company had a test launch that didn't go quite as planned. So it definitely could have gone a lot worse because they still landed safely with no damage to the spacecraft, but they just didn't make it out into orbit as they were hoping. So of course the market didn't react very positively to that news, and then the stock quickly dropped the next week. But for me, that doesn't really change the fundamentals of the company, and it doesn't change how I feel about it. It's essentially a technology startup that's still in its pretty early stages, and for a company trying to innovate in the way that they are, there's bound to be some roadblocks along the way. So the stock is still overall upward trending over the last 3 months, and of course over the last 5 years as well. So it still meets my criteria, and the premiums I can bring in, even selling them at my cost basis of $31, are still pretty decent. So recently I've just been selling calls a bit further out in time, about 3 to 4 weeks, rather than my usual 1 or 2 weeks, so that I can lock in those bigger premiums. Now, if the stock still doesn't recover over the next month or two, I may consider calculating my cost basis, essentially just subtracting the premiums I brought in from the price that I bought the shares at, and then selling calls closer to that cost basis just to get out of the stock. But again, as of right now, I still like everything about the company, I still like the stock, and I'm okay just holding it and continuing to sell calls against it. Now, as far as my other covered call stocks, I'm still trading the same three, those being Arcimoto, Zynga, and Virgin Galactic. And with Arcimoto and Zynga, I have gotten called out on both of those and just continue to buy back in and sell covered calls each week. So if I get called out, I'll just buy new shares the next week because again, I still like those companies and still see them continuing to rise. And if I don't get called out in a given week, I'll just sell a new call the next week to replace it. So again, going back to my premiums tab, you can see I brought in some pretty decent premiums on both of those stocks over the last month. Now, the last portion of my portfolio that we haven't talked about yet is my Leaps options. And if you'll remember from last episode, I had bought an Apple Leaps, and I ended up selling that one about a week or two later for a profit of $50, which was a 10% profit on that trade. So as I've talked about on this channel, it's always good to go into each trade with a plan of when you want to sell. And in that particular case, I had said when it hit a profit of about 10%, I was okay with selling, and so that's what I ended up doing. So when I sold, I had bought a Microsoft call to replace it with an expiration date of March 2022. And currently that one is down about $50, but again, that's why I like to buy Leaps options because I'm not too worried. I still think Microsoft is going to rise in the long term, and I have a lot of time for it to rise and still be profitable on this trade. Now, the last thing I want to cover on this episode is my allocation and essentially how I deal with that with my $200 deposits being added every single week. So if I just go back down and pull up my allocation tab, I've basically just got a table here that tracks the balances in each section of my portfolio. So essentially each week when my new deposits get added, I'll just take a look at each category and see where that cash needs to be allocated to. So since the last episode, I've added 1 share of AMD and 1 share of Microsoft to my long-term holds. And then I've also added more shares on the side of each of my covered call stocks. So if you remember from last episode, I really only had the cash available to buy 5 shares on the side of each of these stocks. Now I've increased that to 30 shares of Arcimoto, 30 shares of Virgin Galactic, and 40 shares of Zynga. So that way, if the stock does surpass my strike price of the call I sell, I can still take advantage of the additional upside. And that's something I always like to do when I sell covered calls. And for a further explanation on that, be sure to check out my most recent video if you haven't seen it yet on whether or not you should avoid getting called out on covered calls. Thanks for watching, and I'll talk to you all in that next video.